Hey folks, welcome to the Kendall Report. I need you to let me know if there's a time lag in the voice, if my voice is out of sync. So I'll wait for your response before I go on. I'm late because I've just been having all kinds of trouble with the platform. So let me know if I'm out of sync. I'll wait for your response. That's what I thought. Okay. All right, so we're doing this without video tonight. This is why I'm late. This week has been, I finally have the whole studio just about done, about 95% done now. So I appreciate everybody showing up. You'll just have to not be able to watch me talk tonight. So we'll be a talking screen tonight. I apologize. Yeah, I thought there was. I can't get it to sync up. I have no idea what happened. Anyway, welcome again to the Kendall Report. So quite the day today that we had. We continue to have this debt ceiling issue plague the markets. And as I was talking about a couple of nights ago, I said it doesn't matter. Well, it doesn't matter from the standpoint fundamentally going forward, whether from the standpoint if it will get settled, okay? Whether they kick the can down the road, they have to do it, because if they don't, then everything's over, right? We can't pay our bills and all that. So it's obvious that McCarthy is making it completely clear that we have to spend less money than last year or not at all. So basically, you've got to run the country on the 2022 budget. You can't go forward and keep spending more money. So from that standpoint, they seem to be pretty dug in. And how far did they take it? And the real question is, and the video name here is X-Date Looms. What really is the X-Date? That is up for debate in itself. Now, Janet Yellen is telling us that the X-Date is at the June 1st date, or maybe a little after. So now she's changing her game a little bit. It's really kind of a scare tactic, if you will. Those of you that have been around for a while know that they've played these games before. They have all kinds of things where they can lag payments and juggle the books a little bit. That's been done in multiple administrations in the past, and it probably will be done again. It doesn't appear that either side wants to move on this thing, and we'll just have to keep watching this story. Now, we did see the markets get down into some extreme levels that I'll talk about tonight. And I once again, I apologize. I spent most of my prep time trying to get rid of this lag. So unfortunately, I'll just be kind of off the cuff and coming from just watching the markets and trading today. So as you know, basically what we're seeing here is this classic standoff, and it's creating a lot of some volatility in here. Now, I'm going to show you in a minute. We got some pretty good selling coming out of the database. We're still above the 42% level, but definitely a lot of volatility in this database. I'm going to go last 4-6 weeks or so, has been an incredible amount of volatility in the database. We saw where it went from 41% and popped 13% plus in one session. And then now we're seeing it start to set back again with some of this volatility. So we had 2 days in a row, one over 1% down. And then yesterday, roughly S&P down 0.73, NASDAQ down 0.61, and Russell down 1.16. So we're basically right back into the 41 handle, lower 41 handle. If you watched how we traded today, and I'll go through these details here in a minute, around the lows of the session, we were trading below STX again. And it was very interesting. There was a great trade and bounce off of that level, off around the 41.14 level. I'll cover that here in just a minute. So just I'll continue some dialogue around this. It's really odd not being on screen, folks. I apologize. So let's talk a little bit here about some other things that are out there. Somebody mentioned NVIDIA to the moon, right? Just crazy, crazy numbers there. And they are looks like they're, at least for now, they're going to be the king of AI. It's amazing how much money they're making on not chips, right? It's amazing. I guess the movement, we've already up 100, now we're up about 125% on the year. So let's go ahead and talk about what's going on. For tomorrow, we got claims coming out, 247K, continuing 1.799. It's anybody's guess whether that goes up or down. My expectation is it might start to climb back up over 1.8. And again, we got home sales coming out, 2.9. We also have GDP revision coming out. I think 1.1 is the estimate there. So we've got some things coming out after that. And so the patterns that I'm seeing just come out of all this stuff and this rhetoric around the debt ceiling, everything around all these economic numbers are just creating more and more havoc in the markets. So, and then once we get through all tomorrow, then we have PCE on Friday. So hopefully between now and tomorrow night, I'll be able to get this thing, the studio, fixed again. I'm starting to hate Streamlabs because it's just really messing up and it's really disorienting this stream tonight. So I apologize. So we also saw with everything else with the debt ceiling, we saw a spike in interest rates. I've been talking about, I thought we were going to pull back in just a little bit on rates, but the original scenario I had going up to the upward range and everything starting to rise looks like it's coming into play. You know, we're seeing the 370 handle on the 10-year and pretty much across the board, the 5-year, 10-year right up in there. And then, like I said, those June T-bills actually spiked up almost, I think, just over 7%. The ones that expire mature on June 1st. So anyway, let's go ahead and get into the database and see if we can get some flow into this stream tonight. All right, so we went from 50 handle, around 51% bullish yesterday, all the way down to 43.18. So we're sitting here right on that 42% threshold. We had 1,921 sell signals for the morning and only 190 buys. So big negative ratios. Like I said, we're seeing these big 8, 13% up one day. Now here's about an 8% down. So crazy volatility in this database. It's usually much more methodical. We don't get these jumps. So I think this trading range, what we've been locked in, is just throwing things all over the place. So those of you using Wavetech, I'd be really careful about some of the signals coming out of the dailies. There's just way too much noise in the markets right now. And these are very difficult times. The weekly patterns are going to be fine. There's still going to be some volatility there, but we're not going to get all of the gyration of the percent bullish like what we're seeing right now. But normally it's just very methodical, moving up in a pattern and down, but there is no pattern here, right? So we traded up to 42 handle again, get rejected back to 41, and we kind of going back to where the percent bullish was before we got into that range from the standpoint of the you know, where the level was, where we're down at 4,100, all of a sudden we're back at 42, 45% bullish. When we get up around 42, it gets up into the 50 percentile range. So it's just waffling back and forth in those levels. So really the short-term database is all over the place. We'll see if it can actually come down a little bit. a little bit below the 42 handle. That's what we'll be watching in the next couple of days. I have a sense that we may have printed pretty much an extreme yesterday. Let's go ahead and go into the technicals here. As always, we'll start with the hourly chart. And it looks like we're about to possibly decline into the London Open tonight. Looks like some downward pressure. We could hold along the 10 and the 21 period moving average, 41.38, 41.35. It looks like we could see some negative numbers potentially come in toward the London Open. Looks like after that, then there's a potential to rally back into this pattern. Now, one of the things that's interesting here, we got this volatility bubble as we came into the last couple hours. We did get that decent bounce all the way back to the 51 handle. So this level down here is what I was talking, the 41.14. There were a couple really good signals. Those of you using the webs, the hourly started to look fairly bullish as we were coming into there. The projections that were coming out of the algos at that time were suggesting we're going to get over here where my cursor is right now, that the next hour after coming into the final 2 hours of trading, we're going to be basically a rebound, and that's exactly what happened. We rebounded right into the close, and a little bit after the close, we got that spike. So what we're seeing now is we get that little volatility in the last of the day. Now we're starting to see that contraction. You can see how both from the market grid standpoint, is contracting down. It was very broad range and volatility, and then the market started to consolidate and drift lower right into these moving averages again. And we're looking at right now, PPM1 is at 0.53. So it's in trend mode up. So you should stay above the 10 period moving average over the next couple hours just because of this rate. But it looks like it will be around the London Open, will at least hit the weakest point that we're going to get. Now, it may just stay above these averages and drift sideways. If you're watching this and you have the indicators, you can actually go in and see what it looks like if you're around at night, see if we're getting any kind of projection or rebound off of there. Hopefully, when I show you the daily, this is where it looks really interesting. So let's go ahead and go over to the daily. And daily, I mentioned this yesterday, it looks like we punched down through all the averages. As I mentioned, the STX, let me bring that over on the far right-hand side. STX was 41.1183, so we traded almost down to it. So it was 41.14 was the low. So we printed down there, got a rebound, and we bounced back to S1. And the high of the session was, sorry, I have to screen back and forth here, it was 57. So we didn't quite make it to R1, which was 69. Yesterday, I thought we might get a little more of a rebound and we would hold those moving averages. That was not the case. But if you look at the algos, at least on PPM1, the top one right here where my cursor is, it looks like we're going to try to get back above that 10 period moving average, which right now is at the 41.63 level. So if we can get back above there, then it's possible that we can see the markets start to move back up on the range. I was expecting, if you recall, we were talking about the possibility that today that the market grid would turn up, but the weak close that we had, the market grid has a clear channel to the downside. And once again, if we come back over to these lows that we had over here, we go back a couple of weeks ago, it was low 41.11, 41.23. Here's another low, 41.20. Another low at 41.22. So we printed. So we've just come back into this range again. We're right back into this sideways range. It starts to look like we're going to get some movement out of here, and it just goes back into the range. And we've been locked in this range for well over a year now. And there's just every time it gets to the bottom, we go up. And every time it gets to the top, we go down. So 42, we're going to call, I think I figured out, I did the midpoint for you guys. It's 39, I believe 39.15. It's close to that number. So we are still long ways above the midpoint of the range between 35.02 and a 43 handle number. I don't have the exact number in front of me. But that is, if you split the range, we're still in the upper end of the range. And based on the theory that somehow there's going to be some big failure in the markets, right now, we're not really trading like that. The markets aren't printing those kind of numbers. You know, you're looking at still the NASDAQ up over 20% on the year. So yeah, it's kind of hard to argue even that this is nothing more than some noise in the market. I know a lot of folks are really super negative again. They're jumping back on it. And once again, we had the banking crisis. You can go after all of these different scenarios that we've had that was supposed to be the end of the world, and they've thrown everything at this market, and it just keeps trading in this trading range. It's as frustrating as a time as I've been through. It's interesting kind of looking back in that somehow for a whole year we've been getting excited on rallies and thinking about rallying up to, I've mentioned these numbers, 4,600, and when we were going down, we printed 35.02 in October. That's when the database started to get traction. So most of my bias, some folks have called me a perma bull, and I'm not. I'm just saying that there's still a bias on our intermediate models to the upside. And when you've got 8 to 10,000 stocks that are long, it's kind of hard to get too bearish in the market, because I know a lot of folks think it just runs off the 5 stocks that have been, we're back into the FANG market, right? And maybe the FANG man market from the standpoint of what's been driving the NASDAQ all year. So, it's just this scenario that we're playing out is just amazing in hindsight, that we are just still in this range. And it's a very, very frustrating period of time. And I think the VIX is printing up over 20 again. And that's another, right? We get there, around 2022, and that's, we get to the bottom, and then we get down to the low teens, and that's the top. So we're just continuing to see the same pattern. I wish I had something more to say, but we're going to just continue to grind this thing out. We're not really getting the sell in May and go away. I'm just going to flop this over to a monthly chart here. And what we've got right now on a monthly basis is an outside bar, and we're trading right in the middle of the range of the month. So you can see here right now, we've had a low of 40.62, a high of 42.27 for the month. Last month, we had a low of 40.68 and 41.98. So we've got an outside bar. And this is one of the things I remember talking about when I covered the long term at the beginning of the month, is that watch out for this 21 period moving average is going to supply definitely going to supply some resistance. I'm going to flip these indicators over to 50 look back so we can get some predictive bars on this monthly real quick here. So you can see the monthly, and is as we come into June and July, is looking like we're still going to have a bit of an upslope, and that 10 period moving average is going to start to turn up. And that'll be interesting from the standpoint of the monthly trend. So I'll cover that when we get into the 1st of June. But you can see this is really kind of a bottoming pattern that's coming up. I'm still not like calling for some crazy ATH long-term, new highs on the markets, but there still is a slight bias to the upside, and I still think there is a 44 handle plus in the market sometime over the next quarter or so. Yeah, I love the flash crash, guys. Good luck. Yeah, hey, listen, we don't have any positions on right now. We've got individual positions, but index positions, we're flat, so we don't really have any positions. So what we're talking about here, this is a monthly chart. So you can see if we go all the way back here to October of 22, that's where the low was, and we're still in this choppy pattern with that bias to the upside. But in real terms, if we go back to August of 22, we had, this is the high, 43.27, the low 35.02, and if you figure that out, the midpoint, we're still in the middle point of that range. So there's, like I said, a lot of opportunities just in this choppy range if you're trading individual stocks. I guess if you're long NVIDIA, who cares what's going on, right? So, but the general pattern on the longer term stuff is still bullish, with a bullish meaning an upward bias. Our intermediate database has still got around 55% long. So that's got enough bias to kind of keep this thing locked in this trend. So, it'll be interesting to see how we play out. So let's go back to the daily here for a minute. I got a little bit off on track here. Let's take a look at the daily market grid for tomorrow. Looking over here, right now, S1, 4113, R2, 4152. So we've already printed above that number already. And then we're looking at 66, which goes into that 61 number that I was talking about a little bit ago on the hourly as far as the upward targets here. And then all of a sudden, RTX is 4178. So there's definitely, if you look at STX on the downside for tomorrow, 4073. So we're seeing 40 handles, S2, 4099. Maybe there's enough emotion in the market to print it down to 4099. I don't think we get much below that number. And I think there's a very strong possibility the type of activity that I saw around the 4114 today looked fairly solid. So if they get down and print down there again, just watch the activity there, see if you start to get bounces. Today it would go 14 back to 21, 22, and then it would work up to maybe 26 and come back, retest the 14 again. It was down in that 17, 14 range, and it just worked a really nice pattern. The 5-minute algos also picked up that rally really nicely. So those of you with the indicators, you know that. You saw that earlier. But if you look here, and like I said, the daily looks like we've got upward bias here for the next couple of days where the markets are going to start to try to get back over this 10-period moving average. Hey, listen, all it has to do is McCarthy comes out and said, hey, I think we're close to a deal. And you know the rest of that story. So we're just locked into this news cycle right now as well. All right, so here's the NASDAQ, and this is interesting, as I've been talking about just a couple of days ago, I said, we'll probably retest this upward slope line on the NASDAQ, and we did that. And here we are, as we come in to tonight, we're already trading STX, look, 13.8 13,883, high 13,883. So we're right on the mark. So the high of the day was right on RTX already printed today. There's also, try to expand this out, there is some fib targets that are embedded in here, 13,789, 13,924. There's a little green dot here, so we might actually be able to print through the RTX number tomorrow. But here's what I would expect. If we stay above, we'll just call it above the 13,750 level, we stay above that level tomorrow, then the market grid's going to turn up and start a little bit of upward channel, and we should continue along this line. Yesterday we closed right on it. If we look at the values here, the close was 13,650, 10-period moving average 13,647, right on the money. So we stayed above it. We had a 0.28 was the, actually, yeah, it was a 0.28 roughly here. Let's see, let me get a right number. 0.17 was the PPM1 yesterday, so we stayed just above there. Now we're back accelerating. We should see more acceleration, and we should stay in above this line into Friday. We'll see what sets up for next week as we come into that. Next, we'll cover the Russell. Russell back into the moving averages again, back to the 21, 1764, low 69, last trade 67, so we're trading right around there. Just like the rest of the indexes, everything wants to crawl right along this 10, 40, 21 range, so we should stay around these moving averages. And we've seen this type of formation before. We're just going to hover around. And we'll see. I think if the NASDAQ does what it looks like it will do, then it'll probably pull the rest of this stuff with it on a relative level, even though we're still seeing underperformance here on the Russell. But this pattern looks very similar. Still have upward slope pattern from there, and that will be. I guess expectations for the next 2-3 days, we should start to get back above that level. I don't expect anything but as we come into this debt ceiling debacle is that it will ultimately get resolved and everything will normalize again. And guess what? We'll still be in the same trading range. There's still... And this is what I meant by it really doesn't matter, because it will get resolved. It will be done. We're not going to default on anything. And no one wants that. The politicians don't want that. They're just trying to get the leverage to get some things done. And if they did get spending to be cut, then that's probably a good thing. And in the end, we come out the other side probably a little better if that's how it plays out. All right, so the 10-year is continue to climb along that line. I thought we might come a little deeper down, maybe get down toward the 365 level. We printed 367 back to 74, close at 72. And we're just going to climb along this. You can see that the algorithms are continuing. Right now, the upward slope on the 10-period moving average on the 10-year yield is very strong and accelerating over the next couple of days. So we're definitely not going to come below this line. 365 will be the bottom. We do have a little bit of a downward channel. We'll see how this thing plays out tomorrow. If we do get a bit of a relief rally tomorrow, or they come up with some kind of deal and we see the market start to come back into the higher 41 handle basis the S&P, then we'll probably see these yields come back in a little bit more in this pattern, but we should stay above this upward slope line here. Take a look at the two-year yields. Same type of configuration. Here we are at the 441 level. That seemed kind of crazy. I remember talking about over here, these fib targets were 450, 464. While those have been negated, it looks like the market's going to continue toward those levels. And I haven't done the yield curve for a while, but we probably will do that sometime next week, maybe after PCI numbers. And I'll talk about that. As you know, there's one more live stream, which is tomorrow night, and then I'll be doing some produced videos. So I'll be changing the channel a little bit. There's still going to be a perspective every day. There's still going to be some things, and that'll be a work in progress as we go forward. So anyway, the patterns that we're seeing here on the yields are just going to continue along these lines. Crude oil next. We're continuing to move up toward that 75 handle. Yesterday we printed up 74, 73, off a little bit. But this 40-period moving averages looks like it's going to be the resistance up here. So 75, 60, 75, 50, that should be the range. I don't think we get through that right now, and we start to drift back, and we should trade within a range of the 10 and the 40-period moving averages. 72.20 to around 75.50 should be the upper bounds, and we should just start to sideways and drift a little bit. It looks like we're going to get stable in here. Now, there are some Fibonacci targets that I continue to mention here. The 200-day moving average here is $80 even, and we're looking at a fib target on the F side right now of 79.66 and 83.50, 85, call it 86. That's these dots up here, and these are valid projections. So, but I think we top out at best at this 200-day moving average. Should be fairly decent resistance here. Next, we'll cover gold. Gold continues to be in this downtrend. It just seems like it trying to stall here, but there's still a lot of downward pressure coming, and we're looking at the pattern to continue to just climb down. Like I said, 1940 is a very big number, and that's on the weekly. I'll bring that up just here real quick. But the weekly, that's about all you can hang your hopes on right there. Is this 1940 is the 21-week moving average that has a reasonable rate of change, which is 0.32 positive. So that's got enough upward momentum. It should hold that, and then we get sandwiched between the 10 and the 21, which is the 1940 and basically the 2000 level. So we might set up some kind of trading range. But overall, I've been talking about this pattern for a while. This is the make Peter Schiff wrong pattern, and we'll see what kind of stories they come up with. But it looks like 1940 has a chance to hold, but ultimately with this rising 40 down the road, we could see as low as, like I said, 1860, 1890 is very likely. And that would have everything to do with the higher interest rates. Dow continues to do well. If you folks would remind me, hopefully I can get everything fixed on the channel here, and we'll cover the Dow tomorrow night. Bitcoin will be the final market we'll cover, and it's got that same death pattern that gold has on it, and it looks like we'll challenge the 21. This is the same pattern almost exactly that's on gold, and we're looking at that number 25,222 is number we traded down to 25,878, back to 26,1 right now. We're just, the only thing that's positive looking at this chart right now is there's an upward sloping 200 that has a very positive slope to it. So we should be able to be on either side of the 200 week, this is a weekly chart, 200 week moving average, just a simple average. That'll be what you want to watch. The 21 should be the floor, 25.2. The 10 should be the top end. We'll call it 28,000. So we probably will randomly trade through there, but remember that the 10 is coming down. So from 28,000, it's going to all of a sudden be 27.5 and continue to contract and force us into some kind of decision point. And at the moment, it looks like the decision point is going to be lower prices and potentially coming, maybe like with gold coming down toward the 40-period moving average, which all of a sudden puts us up way down at 23,000 on Bitcoin. Well, normally, folks, I would come back on screen here. This will do the stream for tonight. I'll see if I can figure out what's going on with this lag and things. I have no idea what happened. Didn't change anything from last night, but that's the way it goes. So thanks again. You folks are awesome. Listen, we're still gonna do some great work here going forward. There's just a whole lot of things going on that are causing me to change a lot of configuration. Some of it is personal. Yeah, so somebody's asking about the indicators. Yeah, so they're not an update to the indicators. They're new. There's another suite of indicators coming out. If you did just buy them, you'll get a very, very deep discount to add on. There's going to be, we're trying to figure out how to offer where you can buy suite 1 and 2, or you can get the whole suite, and there's going to be an offering discount price. Like I said, I'm hoping, this is one of the things I'm hoping to finish up next week. So there'll be a slight add-on for folks that bought the first ones, but there's some really cool stuff that's coming out that you guys haven't even seen. I made I guess the mistakes of putting the predictive SMAs up there. That's just one of things. I believe there's like nine new indicators roughly, including some trading strategies and some other trade signals, STX signal, a bunch of other stuff coming out. So it will be, it'll be the next level. I'm making new videos for them and all that. And then I do plan on doing some streams just on these new indicators and tying everything together. And so, yeah, so I would just tell you that the effort here is going to be focused on and training. Somebody made a comment one night, and I already was going in this direction, but teach us how to fish, don't give us the fish. And that's what we're going to be doing, more of an educational platform. There will be daily macro views, I believe, is what I'll be doing. And they'll probably be out. I'm not sure when the releases will be, but I'll try to get some time that you can count on them to be released. And they're going to be, like I told you, somewhere between 10 and 15 minutes long, just like the old days. And we'll have that format from that standpoint. But yeah, so anyway, folks, thanks for watching. Sorry for all the technical crap this week. It's amazing. This is the scary part, is I realize I have to, this computer I'm on, I have to rewire everything. So that's not going to happen until Friday. So good news is we won't be worrying about the live streams. It's been quite hectic. As I've been telling you, I've rebuilt the whole studio, and just, yeah, it's been quite the effort, and exhausting at best, along with some other things that are going on. Yeah, there will not be any live next Monday night. Somebody's asking, James Kim. Yeah, I'm just looking at some of your comments here, folks. I'll hang out for a few minutes. So tomorrow night there'll be another stream, hopefully with video and the whole bit. And don't give up on the channel, because I'm still going to be here next week. It just will be slightly different arrangement. Some of you that are in the live room know I have some. I have a family member that's very ill, so I have some things that are personal that are taking me away from here. But there will be plenty of good content that we'll be doing. Okay, so just hang in there, and it's all going to be good. Like I think what ultimately will happen is you folks are going to be really happy, and I think our community will grow substantially. So just keep showing up. I'll probably do some live streams like we used to. So then when I do a live, they'll actually be more exciting. So probably during market hours. I'm going to put a whole schedule together, folks. I'm reworking everything that I'm doing, the whole idea of rebuilding, building a new trade desk, the whole bit. There's a lot of good, and there's a lot of challenges in life when as you go through it. And those of you who've been around for a while, and anybody that's been in life, I would suspect that all of us have had some things to deal with. So I appreciate everybody being really patient. I think you'll be pleased in the end. I really do, because I really think understanding how to use the indicators and trading, I'll probably end up doing some live trading sessions, some things like that you'll find will be really good. It'll just be probably during market hours and different things going on. Yeah, so yeah, we'll have some good content. And if you have suggestions, some of you have taken your own guidance and went ahead and sent me some ideas and concepts. But tell me what you'd like to hear. I'd love to see that. You make comments here in the channel, or you could send an email to info@Kendall Report, and that's primary inbox. Tell me what you think, and what you'd like to see educational wise. There's some pretty good content that we came up with that I know you're going to benefit greatly from, and you folks will be glad you met me. Yeah, Gil, if you follow me on Twitter, I'll probably put something out on Twitter. So it just got finished today. Still have some software to finish installing tomorrow, but about 80% of that environment's up and ready to run. So it's been something, been quite the effort, but you'll see very soon. It's way cool here. Probably the best trading room setup I think I've ever had. So it's good stuff. All right, folks. Yeah, there's you folks will see. I'm putting. I just see some comments again on the new indicator suite. Yeah, and just know I have gotten very dangerous. I have always had to depend on and still depend on to a point of outside programmers, but I have a whole lot of concepts of things that I have been trying to get in place. And thank you to ChatGPT-4, Bob Kendall is becoming a programmer. I've managed to put some things together that's pretty cool. So there's more future things that will come from me. I always said if I could program, I would be dangerous. Well, it looks like AI is making that difference for me. And I've already done some pretty amazing stuff. And I'm looking forward to having some time to spend some more time with some of the AI stuff and things I've been looking at. But really, really interesting because I finally have a helper that doesn't care how many times I ask him stupid questions. So, yeah, listen, I love programmers. I've been dealing with them my whole life and still need them. But being able to get concepts into some stuff. I'm even doing some easy language programming and some other things. It's very interesting what you're able to do. So anyway, folks, as always, good chatting with you. Sorry for all the technical issues tonight. Hopefully they'll be all back together and next week will be better anyway. So anyway, folks, thanks for watching. Thanks for hanging out. We'll talk to you tomorrow night, same time. See you then.